Welcome to another daily edition of Crypto for the Rest of Us. I try to bring one tip, tool, or coin analysis on a daily basis, try to keep it short and sweet. If you appreciate the effort I put into this, please do subscribe and please smash that like button, leave some comments. It really helps the channel out. So take a look at this. This is what you don't want to do, is freak out. Maybe you have or haven't seen this, the crypto bubbles, where it shows you, are things up, are they down? It has an hourly, green is up, red is down. Daily, look at all the red today. Weekly, also all the red in a week. So let's talk about crypto markets in general and the fact that, are things crashing? Are they taking off? What's going on? Well, first to note, what I'm going to try to point out is that the crypto markets are young and not anywhere near as capitalized as stock exchanges like the New York or the NASDAQ, what have you. So they're much more volatile. They can be more volatile and they can be manipulated a lot easier. But you've got the choice of looking at this from a micro perspective on a daily, like looking at all these red bubbles, or on a macro perspective. You look at things over a long period of time, you're going to see when you normalize and you take out all the noise of the bar charts going up and down, that over time, if it's going up and to the right, that's what we're trying to do. So take a look at this chart. I show this constantly. This is the total crypto market. And we have here the last run up in prices. Look how much it ran up and then crashed down and then ran up again. And now we've had a run up and we seem to be consolidating and moving sideways for quite a while. But just wanted to give you an idea that back in, I think the total market back in March, we're looking at 2.2 trillion. And then in March, it also hit 2.7 trillion. That's significant. That's $500 billion in a month. And then it dropped down in May to 2 trillion, from 2.7 to 2 trillion. It lost almost a third. And that happened in 60 days. That's incredible. Then you jump in, you look at the total crypto market minus Bitcoin, you're going to find a very similar pattern. So in other words, this is what you would call the altcoin market, going from around $1 billion back here in February, all the way up to 1.2 trillion in March. So in a month, we went from 900 to 1.2. That's 300 billion. 300 billion on 900. That's 30% in a month. The market shot up and then shot back down, and now it's consolidating. If you just look at Bitcoin itself, very similar pattern, a run up and a consolidation. But it had highs of 73,000 and lows of 56,000, all in a span of March to May, 60 days. That's a significant difference in 60 days. That means you should freak out and sell everything and get out of the market. Well, crypto, like anything else, and this is never financial advice, not a financial advisor, it's volatile. It's going to be volatile. So if it's not the game for you, you might not want to get in. Let me show you something here on CoinMarketCap. I pull up. I'm just going to scroll down and look. Actually, let's go into Bitcoin. It has the largest, fully diluted at the moment, $1.4 trillion. What they have here is interesting. I did a video on this before showing that, hey, there's different markets. So you can get different prices depending upon where you're buying and selling. But they've got what I love, this plus 2% depth or minus 2. In other words, you want to increase the price of Bitcoin by 2%. What would it take? On a popular exchange like Coinbase, which does about 3% of the volume, very small, it's going to take $14 million to move the price up by 2%. Well, it's $67,000 at the moment. What is 2% of that? $13.40. So you could move the Bitcoin market up with $14 million. You can move it up $1,300. Now, of course, it shows you the total volume, which is $1 billion today, just on that exchange, going back and forth, right? Same thing with 2% down. Now you're thinking 14 million is a lot of money, but let's think about hedge funds and it's a drop in the bucket. More importantly, I went in and just pulled up Render, which I like a lot. I think it's number 30 on the market cap list. The market cap, okay, I always have to say, not the fully diluted market cap list, the one where they say circulating coins times price. I don't like it, but that's how they list them. Coinbase, again, Coinbase is 10% of the market for Render. And to move the price up 2%, $473,000. That's nothing to a hedge fund or 600,000 to move it down 2%. So if you wanted to drive the price down, maybe push out some people that are using leverage, or just drive the price down for whatever reason, it is not going to take a lot of money. And that's a popular coin with a $4 billion market cap. So with $500,000, you can move the price up or down 2% on a $4 billion asset. Okay, the markets are volatile and they'll be volatile. And that's just the way crypto works. I'll put a link to this Crypto Bubbles if you're interested. A lot of people like to jump on here. I don't see the point of it. I don't really use it for anything other than just getting an idea of what the market in general is doing. But thank you for watching. I hope this has been helpful. That's the tip today, that do not freak out. If you're a long-term investor, even if you're just in it for this bull run, it could be 200 days, 300, 400, no one really knows. But it's theoretically going to continue going up. I believe we are at the beginning of crypto stages. So I'm in this for the long run. My long run is probably shorter than yours because I'm old, but I would love to just hand my kids crypto when I pass away, because I think this is going to take off, continuing to grow. Thank you for watching, and let's build generational wealth together. See you tomorrow.